Hi again, folks. I'm Doug Hensley, president of Hertz Real Estate Services, and I'm coming to you today with our March 2023 Farmland Market Update. Depending on where you own and operate land, or when you're watching this video, we're now within 30 to 45 days from seeing wheels turn en masse, leading into the Midwest spring planting season here in the U.S. I've always thought spring planting is a really exciting time of year with lots of optimism for what's to come. And as we approach spring planting season this year, we've put 2 to 3 really fun and profitable years back to back. And farmers and landowners are, of course, hoping to add another one to the fun and profitable column in 2023. Assuming we're able to grow an average crop this year, that seems very possible. And there have been good opportunities to lock in profitable grain sales already for fall 23 production deliveries, and that's all been very positive. But not everyone likes to sell too much of a crop they haven't yet grown. So it is likely that many, if not most producers, aren't yet too heavily sold on their 23 production. This isn't necessarily good or bad, but beginning here in early to mid-February, so a month ago, we did start to see some legitimate drift lower in both our corn and soybean markets, and that coincides with widespread reports that Brazil has grown a really big soybean crop. During our off-season, obviously in South America, they're in the middle of their production season. As most of you already know, Brazil is a primary export competitor to U.S. agriculture, and when they have good production success, it does impact our grain markets. So some of the early bloom is off the rose, so to speak, here in the 2023 production year, and we have lost 50 cents on fall corn contracts and about the same 40 to 50 cents on soybeans over the past month. U.S. export demand has particularly been weak, and especially for corn. And the dollar has been really strong, which makes U.S. commodities, both corn and soybeans, more expensive when directly compared to other suppliers like Brazil. And that's not to say anything at all about the geopolitical tensions that we're dealing with right now with China, and what's happening in Ukraine and China in particular, because they're one of our biggest ag customers. So that complicates things a little bit. So some of you are saying, okay, Doug, what does all this have to do with the farmland market? Well, anytime we see weakness show up in our commodities, it impacts our profit potential at the farm level. And the recent move lower in the corn complex in particular is beginning to get some attention in a not so fun way. Remember, many farmers are looking at $5 per bushel break-even levels for 2023 cash flows for growing corn, this corn crop. And you'll maybe remember me talking about higher 23 input prices for this crop when we compared it to a year ago. And when the December 23 corn contract is holding at $5.50, this is just to say the price of corn matters, because we're seeing the expense of $5 per bushel going in, and if we're able to sell it for $5.50, our margins are tightening up some. Now, we could see a production hiccup somewhere here this growing season in 2023 that could squeeze overall production, and we could see resulting commodity prices move right back up into the $6 to $7 per bushel range for corn. But the commodity environment is just a little more bearish than what it was a year ago as we approach spring planting. As it relates directly to current land values, we've not really seen much weakness yet. In fact, we've continued to see strength overall in recent auctions that we've handled. Sales at 15, 15.1, 15.2 per acre, 15.6, 16.8, 17.9, and even a couple sales in the 18s and 19s per acre. Not any new records, but still really strong and still very competitive bidding from both farmers and investors. And I expect that this market will continue to kind of chop sideways until we begin to get a sense for the 23 production year and where our commodity markets will be. Remember, farmers in particular are using last year's profits from 22 and even some from 21 to reinvest back into their business when they buy a farm or when they buy new equipment. But if margin compression, like I mentioned earlier, continues, that could foreshadow the potential for some weakness in the land market. For now, again, you should know lots of excess cash is still being used in this land market, and even though higher interest rates are very real in our broader economy, they're not yet really pinching agriculture too hard yet because there's still a lot of cash being used to buy assets, buy new assets and expand businesses. But keep your eye on corn and soybean prices because they are really highly correlated to land values. You can be sure that we will be keeping our eyes locked in on all things impacting the land market. And whenever you want to visit about things in the neighborhood of your farm, please always feel free to give us a call at 800-593-LAND. That's 800-593-5263. Or you can message us through the website at hertz.ag. As always, thanks for watching. And just know we'd welcome the chance to talk to you. So we'll see you again soon.